are. Welcome to yet again another edition of PCS Q&A. I am your host, MJ Boyce. I am the Director of Community Outreach at PCS Grades. Boom! Happy St. Patty's Day to everybody. We have a great show for you today. Before we get with our special guest, Gitesh, and our DoD updates from the lovely Megan Harless, I'm going to go ahead and I'm going to just go to town on those housekeeping items. By the way, it's just a special edition. We've got some special prizes we're going to be giving away today. Oh my gosh, you don't even know. I mean, it does have something to do with green. And of course, it always has to do with shenanigans. Let the shenanigans begin. All right. So before we get to Megan Harless, our PCS reform advocate, AKA BA, censored for little ears in your room because we love you, right? We're going to go ahead and get to those housekeeping items as we do every week. Ready, set, here we go. All right. First and foremost, we've got the answers. And if we don't have the answers, guess what? We know who does. And if we don't know either of those things, we're going to take your questions for action and get back to you with an answer. Speaking of questions, or comments or concerns, go ahead and drop those in the comments section. Engage with us, ask us questions, tell us what you know, what you're wondering about VA home loans today. Okay, tell us, because every time you engage with us is an entry to win some Hope Design Bling and a special St. Patty's Day giveaway. And as always, we bring these experts to you. Today we have a lending expert. We bring Transcom, we bring education experts, we bring employment advocates, we bring military movers, all up in here so that you can ask those questions to the source about what your PCS might look like. Now, sometimes you're going to face a situation that is specific to you and your military family. And in those specific instances, you're going to go to one of two or both of your forever and always resources. Number one, your local chain of command. Number two, your local transportation office. Those are the people who know you. Those are the people who are dealing with your stuff. Those are the people who could take your issues and further them for action. Last, but certainly not least, we got to continue to do our part, people. We've got to flatten that curve. We have got to flatten that curve. Wear your mask, social distance, whatever it takes. Because when we flatten that curve, we're going to flatten Murphy with it. Really quick before I hand it over to Megan, really quick. We at PCS Grades have started something called the Spouse Sponsor Program. Yes. So when our service members PCS to a new duty station, they get a sponsor, but where's ours? We deal with the details 9 times out of 10 more than our service member does. That's just a fact. So PCS Grades started a Spouse Sponsor Program to kind of help out with that a little bit, to learn about your area, to provide that warm handoff that we all wish we had. So if you're interested in potentially becoming a spouse sponsor, I want you to go ahead and hit us up at the end of this or message the PCS Grades Facebook page. We will drop a link to the position description. It is in certain key areas right now, but it will grow just like the military family grows. So stand by for that link, and if you're interested, get with us. And with that, I'm going to hand it over to Megan for those DoD updates. Megan?
Hey, everybody. So just a couple of things for you today. The first thing is to remind you about the claims timeline. If your shipment was picked up after May 15th, 2020, you have 180 days to file your claim. If you have a non-temp storage shipment or your shipment was serviced before May 15th, 2020, then you only have 75 days. The 180-day timeline change, it's not a COVID policy. It was approved for that change to happen before COVID was a thing. But the way that the moving industry tender of service works is that it doesn't take place until May 15th. So I know it seems a little bit confusing because we had COVID, the shutdowns, the stop move orders, and then that policy change that a lot of folks, think it's just because of COVID, you have 180 days, but it is not. It is a regulation change. So until further notice, it's 180 days. It's in the tender of service as a regulation. The second thing, for our friends that are PCSing to Alaska and are traveling through Canada, we've been seeing a lot of things lately about, requirements to enter Canada and what you need. You're going to need to have a COVID test done, and it's going to have to be negative. I believe it's within 48 hours of your arrival to the border is when you have those results. And then you are only given a certain number of days to get through Canada, depending on your entry point. So we've been seeing anywhere from 4 to 6 days to get through Canada up to Alaska. We got some links for all of that information. I'll get them dropped into the comments below so you all can go reference them and look at them and read the language for yourself. But that's all I've got for now, so I'll send it back to you, MJ.
Yes, the shenanigans are about to begin because I'm about to introduce our special guest for today. We've got Gitesh Kapoor from Fairway. See, the shenanigans have already started. Independent Mortgage. See, Murphy, back off. Oh, Murphy. Anyways, Gitesh, can you please tell our audience a little bit about yourself?
Well, thank you, MJ. I'm Gitesh Kapoor. I am the branch manager here at Fairway Independent Mortgage. I manage the DC and the Ellicott City branch here in Maryland. I've been with Fairway since 2017 and in the industry for 20 plus years. I'm grateful for the opportunity to help you guys out today, answer some of your questions, and hopefully make your PCS a little bit easier as you look to buy a home or refinance your home down the road.
Awesome. Thank you and welcome. And again, so also thank you, Megan, for those DoD updates, because let's just face it, y'all. She goes down the policy rabbit hole so that we don't have to and breaks it down Barney style for the peeps like me. So, preach. We have a few shout outs here just for the record. Hey, we've got Cassandra. That's a familiar last name. Oh my goodness. And of course you love your favorite lender. I hope so. And then we've got Sarah. She knows this topic is very much so needed. Peeps that have asked us about this, if I'm not mistaken. And Monica. Oh, see, shout out Monica. Yes. Keep that going, sister. Keep that going. Yes. All right. We're going to dive right in, people. We're going to dive right in. And we're going to start with question 1, as I always do. So you ready, Gitesh?
I'm ready.
All right. Just to get the basics out of the way, can you tell our audience the difference between a VA home loan and a conventional loan?
Yeah. So a VA home loan is a loan that is guaranteed by the Department of Veterans Affairs. A conventional loan is traditionally backed by Fannie Mae or Freddie Mac. Now, Fannie Mae, Freddie Mac, or Ginnie Mae in this case, a subsidy of Department of Veterans Affairs that does the VA loans, are government-sponsored enterprises, commonly known in the mortgage world as a GSE. I know you guys love your acronyms, so here's one from us. So a GSE. A conventional loan, unlike a VA loan, requires a minimum down payment, more often than not. Has mortgage insurance premium if you don't put down 20%. Has different guidelines. Often has more limitations in debt to income ratio, in credit score requirements, reserve requirements. So high level, those are the biggest differences. A VA loan can only be used to purchase a primary residence, a home that you plan to occupy and live in. You don't have to stay in it, but your intent at the time you buy the home has to occupy the property. So you go move in it, you get your orders. You weren't expecting them, but you still get them. I know that happens. It's okay. If you have to move, you can convert that into a rental property. You don't have to sell a home and take a loss. But you must occupy the home as a primary residence. A conventional loan can be used to buy your primary residence, can be used to buy a vacation home, can be used to buy a rental property. So those are some of the advantages and disadvantages there. VA loan does not have any mortgage insurance premium. That is one of the biggest advantages of a VA loan that you have. You can put no money down and have no monthly mortgage insurance premium. So all you pay is principal and interest on the loan, your property taxes, and your homeowner's insurance and homeowners association fees, if any.
Got you. And, Jenna, shout out Jenna. Jenna said, I thought you had to live in it for a year. That's good to know.
Yeah, you don't. I think that's a misconception out there. You can literally live there for one day. You can live there for one day, and your intent just has to be to occupy the property as your primary residence. Obviously, we don't encourage you to buy a home to make that into a rental property, but we understand that you have circumstances outside of your control that may require you to move out. I have a client who refinanced with me last year, like many other clients, because last year was a big refi year for many, and hopefully you all took advantage of it as well. They had bought a home in Virginia and lived in it for 2 weeks. And they got the orders one day after they had bought the house.
Of course they did.
They hadn't even unpacked yet. So they stayed there for 2 weeks, and then they packed up, and then they moved. It was a pretty quick turnaround. And many lenders actually told her that she is not able to refinance the home because she never occupied the home as a primary residence. But she was still there for 2 weeks. That's all it took, and she was able to refinance. There was no penalty. There was no negative impact to her or the loan or anything. And yeah, there's no requirement for 1 year.
Jenna says, I'm buying all the things now.
There you go, Jenna.
Go for it, sister.
Houses everywhere. So now that we know the difference between the VA loan and the conventional loan, with the VA loan, is there eligibility requirements to use it that a person would have to meet, or is it open to basically anybody regardless of time of service?
So great question. So yes, there are requirements. Mm-hmm. So if you're active duty, you have to be active duty for at least 90 days. If you're in the reserves, same thing applies, that you have to be active duty for 90 days, or you have to have 6 years of credible service. So there are certainly requirements that you have to meet. If you are no longer in the military, you must have your DD 214 to make sure that you're eligible. We can certainly help you review that. There's whether it's you or your surviving spouse, if you're not remarried or remarried, there are many factors that go into play. I do recommend that you either call your local lender, call me, or call the VA, and you can request your certificate of eligibility before you apply for a loan or start looking for homes.
So getting that certificate of eligibility before you go look at homes and before you start talking to lenders, why is that piece so important to have, that we should have that before starting the process then?
So it is important that you talk to either the VA or your lender, okay, and have somebody pull your certificate of eligibility before you go and start looking at homes, because the last thing you want to do is look at homes, fall in love with the home, and then find out you don't qualify.
Oh my gosh!
That's the worst. That is the worst. Yeah. I do that a lot with our rental homes. I find a beautiful home, and then I look at what the rental cost is, and it's above the AH, and I'm just like, no, didn't love it that much.
Yeah. I know somebody like very close to me who will look at things without looking at the cost, and then realize that that's more than she wanted to spend.
I feel like you're trying to call somebody out here.
No, I'm not calling anybody directly out. I'm not calling anybody out. I just know somebody. But really, like, you should. I think it's always good to be prepared, and having your certificate of eligibility in place allows you the opportunity to make sure you have a big piece, right? So you must have that in order to get a VA loan. So if you're missing that core piece of equipment that you need in order to be successful out on the field, right, you are setting yourself up to fail. So you want to make sure you have that. That is a must-have. And any good lender should be starting with you, if you're applying for a VA loan, by looking for your certificate of eligibility.
So another question to tie in with this that we've had a lot of people question and ask, and MJ helps clear this up on one of our webinars recently as well. The VA loan no longer has a cap on it, correct? You can, or correct. Is there like how, what do you know about that?
All right, so great question. So VA loan does not have a cap on it anymore, set forth by the VA, as long as the veteran has full entitlement available to them. This is where the certificate of eligibility comes into play. So let's take you, for example. You currently own a home and have decided to keep it as a rental property, and it's a VA loan. You have a certain amount of entitlement tied to that property. You're now relocating to a high cost living area like the DC Metro. You're coming to DC, coming to Virginia, and the loan limits over here are much higher. So you will have what's called a bonus entitlement available that you can use to buy another home. But you do have a cap on how much you can borrow with no money down.
Okay.
Most lenders have placed a cap of their own because VA just kind of, it used to be a limit of whatever the county loan limits were, set forth by the FHFA, another acronym for you, the Federal Housing Financing Administration. So if that limit was $400,000, you could buy a house up to $400 and put no money down. If it was $500, it'll be $500. Well, now they have no limit. Most lenders have put a cap of 1.5 million. Some are staying no more than $1 million. So there are additional requirements that go into play. But for the most part, if you qualify, there's no cap.
Okay. And so with this, you can use the VA loan then multiple times. It's not just a one and done type of deal. So if we PCS from Texas to Virginia, we can buy a home in Virginia. 3 years later, we get PCS orders to California. We can use the VA loan again to buy a home in California.
Yes and no. So you could always use your VA benefits to buy multiple properties. Always.
Mm-hmm.
Because as long as you have enough entitlement available to purchase a new home.
Okay. And can you speak about what that entitlement is?
That's where the certificate of eligibility comes into play.
Okay.
So VA will guarantee 25% of your purchase price or your loan amount in order for you to get that VA loan with no money down.
Mm-hmm.
I'll use round numbers to make my life easier and not have to get a calculator out. So all right, thank you, MJ. So you buy a home in Texas for $400,000. 25% of that is $100,000. That's how much entitlement has now been used and tied to that property. Until you sell that home, now I know you can refinance out of it, but VA guidelines are you must sell that property in order to restore your entitlement. So you keep your home in Texas and now you're moving to Virginia. Virginia, the loan limits are, in the area that you're moving in, $800,000. So you have a higher county loan limit. We will take 800,000 times 25%, which is 200,000. Subtract from that what you already used, which is $100,000. Your available entitlement is $100,000. Multiply that times by 4. That's your maximum purchase price with no money down. So you can now go buy a house for another $400,000 with 0% down. And if you fall in love with a home, like you do with things more expensive than you want to spend, for $500,000, you don't have to put down $100,000 to get that VA loan. You only have to put down the 25% of what's available to you and what you're buying. So take the difference times 25% is your minimum required down payment. Now, please keep in mind, when you use your VA benefits for a second time, you're active duty, don't have any disability rating, you're not a Purple Heart recipient, you do have to pay a higher VA funding fee if you put no money down.
Word. Okay, so I'm just going to tell you right
Good
now.
question.
Our people are so engaged. This is not even funny. So there's a couple people who want to kind of clarify some things. So just to clarify, shout out Andrea. There's no minimum requirement, time limit for the VA loans. Specifically, can we sell the house after 2 years? For example, going to a school like the War College, that's only a year. So that's correct.
You could sell a home in 2 weeks.
Just like his scenario.
Yeah, as long as you have enough equity in the house to support paying the real estate commission, closing costs, whatever that you have to pay, you can sell the home anytime you want. It's your property. You can sell your car anytime you want, sell your house anytime you want.
So I can buy a home like a fixer-upper and fix it up and then flip it and sell it in a month, and it's totally
The
Okay.
intent behind your home purchase needs to be that you plan to live in the home,
Okay.
Intent.
not plan to buy a fixer upper, fix it up, and flip it.
Okay.
That's not the intent of a VA home loan.
Okay. So friends, again, just like we're not going to jail for taxes, we're also not going to jail for improperly use of our VA home loan. Okay. So that's why we have Gitesh here to help keep us straight on this. It's not worth going to jail for.
No.
Hashtag go to jail for something good.
Or
Yeah.
you can buy a home and not go to jail altogether for good or bad reasons. Just don't go to jail.
Yeah.
You can buy a home. It could be a fixer upper. You can certainly put your sweat equity in the house, and it is highly recommended you do that. Right?
Mhm.
You can put your time and energy while you're living in the home, and make the home better. So when you do have to sell it, you can sell it at a profit. That is perfectly fine. But don't go buy the home with the intent to sell it in 2 or 3 or 4 months.
Okay.
Word. Okay. And so, again, with the clarification, Crystal, shout out Crystal. She's one of our spouse sponsors, by the way. So you can use your VA loan more than once. There's just a monetary cap on how much you can use in a lifetime based on your eligibility. Am I understanding that correctly?
Yes, to some extent. So you can use your VA home loan more than once. There's no limit on how many times you can use it. There's a limit on how much is available to you if you have an outstanding VA loan at the time you go buy a second house.
Okay.
If you have 100% of your VA eligibility available to you, your entitlement available to you, you can buy a home every time you move. If you have an existing home with a VA loan, then there's a cap on how much you can borrow, or how much you can buy the house for with no money down.
So let me put
Right?
out the scenario. It's kind of like Crystal. If you were to buy a house right now and you PCS and you decide to sell that house and you get all that you paid for it, right? The next time you go to use your VA home loan, it's as if it reset, correct?
It resets. You have 100% available, correct?
No matter how many times you do it.
Correct.
But with the caveat, remember people, your VA funding fee increases every time you use it. Unless, and I can speak to this one because I used to be a VA benefits advisor back in the day, Joint Base Anacostia Bowling, shout out. So yes, if you have a disability rating of 10% with unemployability or 20% or higher just in general, that VA funding fee can be waived. So no matter how many times you use it after that, as long as you have that disability rating, you can continuously use that over time without said funding fee.
Or you can put 5% down.
Or that.
And reduce your VA funding fee to 1.65% instead of 3.6%.
Word. And then
just one quick clarification for Crystal. There is sometimes a cap on how much you can borrow with no money down, depending on your lender, right? So that $1.5 million cap that comes in, it can vary from lender to lender, but that is still in the place, even if you have full entitlement available.
Word. Okay. And then the last one before I actually get to my question, because I'm telling you, our audience is super engaged. They love you, Gitesh. They're just like wanting
the shenanigans.
They want the shenanigans, and you provide the information to counterbalance those shenanigans. You're welcome. Okay.
But we don't go to jail.
That's right.
Right.
Just don't go to jail.
But we don't go to jail. And we will get to all of your questions, by the way. We do keep in touch with our guests, and Gitesh is kind of like our buddy. So Monica, shout out Monica again. You're on fire, girlfriend. Do VA loans require a minimum credit score? And additionally, do they require a down payment?
VA loans, VA specifically does not require a minimum credit score. Again, most lenders have a limit that they set, right? Some will go down to 520. And then there's a handful that will, very few will go to 520. Some will go to 580. I know Fairway will go down as low as 600. A lot of VA lenders have ended up putting a cap of 620 minimum credit score. So we don't use the average of the 3 scores. We use the lowest middle score as reported on the credit report out of all the borrowers. So it could be you, your spouse, and the middle score for the spouse or the service member is below 620. That's the number we will use. So hopefully, if that is the case, it is the credit score of the individual who is not earning the income or whose income is not needed to qualify. So this way you can still buy a home by simply removing yourself from the loan. And then she had another question.
Oh, yes.
Besides the credit score, down payment.
It was, do VA loans require a down payment?
VA loans do not require a down payment as long as you have sufficient entitlement available to buy that home without a down payment.
Okay. All right. I mean, you guys are on fire. I'm just super proud of you all. And I'm just glad because we've got Hitesh for this hour and you are just taking advantage of it. Awesome.
Bring it.
Fantastic.
I love doing this.
Bring it, he says. Oh, see, he's on board. This is why we love him.
And
okay.
You can share my MJ, you can share my contact information. So even if you have a specific question about just eligibility or qualifying, I can certainly talk to you no matter what state you are buying in. If I'm not licensed there, I just can't discuss your interest rates with you. So I can kind of set you up and then put you in contact with somebody who can assist you if I can't assist you, but at least guide you in the right direction.
See, how cool is that, y'all? That's pretty sweet.
So with that, if you are licensed, say I want to buy a home in Texas, if you are licensed in Texas, then we can use you as like our lender then. And
yes.
I don't have to try to find somebody.
I would love it if you use me as your lender, right? But you can use anyone you want. You can reach out to me with any questions you have regardless.
Awesome.
Yeah.
Word. Okay, so let's talk a little bit about specifics. What specifics about the VA loan, the VA home loan, do military families need to know about? Like we kind of covered the down payment. It's not required unless, any caps, those inspections I'm actually interested in specifically.
So I think a lot of that we covered already with some of the phenomenal questions that were asked leading up to it and the scenarios that you ran by. So, things you need to know is, well, first of all, how much do I qualify for? Right. So you should start there. So talking to your lender becomes available. So you're not looking for a home that you don't qualify for. Right. If there is a down payment required, considering you have an existing VA home loan outstanding, are there ways that you can get out of that VA home loan and free up your entire entitlement? I'm going to come back to that and elaborate on that a little bit more because I'm sure that will be a question that comes up. Things you need to know as you're looking to buy a home. It's just how competitive you need to be. So you mentioned inspections. The things that come up, now inspections vary depending on where you're buying, right? You need water test if it's not public water. You may need septic inspection if it has a private septic. You always need wood destroying insect inspection. So not just termite, but any wood destroying insects that can cause rotten wood. That's always required on a VA loan. And depending on the state that you're buying in, it must be paid for by the seller. Well, it just cannot be paid for by the buyer. A lot of times the real estate agents will just cover the cost and move on. It just cannot be paid for by the veteran.
The inspection.
Depending on the state, the termite inspection or the wood destroying insect inspection.
Okay.
But the home inspection, the water test, the radon test, septic examination, the septic test, the pool inspection, they all have to be paid for by you as the buyer. And the purpose of the inspection is for you to, identify a honey-do list.
Yes.
right? Or a handyman duelist, in my case. And more importantly, things that you want to be aware of, even if it's for informational purposes only, the potential defects in the home. And an inspector will go out there and they will inspect everything, right? They will inspect every single light switch in the house. They'll make sure that the wires are properly grounded, make sure that the receptacles are up to code. They will make sure that the AC is working and the heat's working. Depending on the time of the year, they may not be able to inspect the air conditioning, but right, because if it's too cold, they can't really turn the AC on. So it is just it's kind of what it is. But they will inspect all those little things, right? Including, is the caulking around the bathtub sufficient, or is it causing any kind of a water damage underneath it? So an inspector kind of looks at the home with a fine-tooth comb, while you can continue to focus on, and I'm not trying to minimize this, but you can focus on what bedroom will the kids have, or what color should I paint the room, right? You can focus on making that house your home, and the inspector will help identify things that you need to either fix, replace, have them, have the seller fix, to make sure that your home is safe and doesn't present problems for you later on, doesn't become a money pit. Okay.
Which helps.
Yeah. Right. So I think we covered the caps already. Down payments we covered. And again, if you have a specific scenario on the down payment, please ask the question. The answer varies based on what state and county you're buying in, and your loan officer should be able to guide you in that process. You don't have to know all the answers. You just have to ask all the questions when you're working on your lending situations. I can, again, look up the county limits in every single state, kind of guide you in the process. I can pull up your certificate of eligibility and tell you what you'll be able to qualify for, and kind of guide you through that. But down payments will vary based on whether or not you have any entitlement available.
Okay.
And sometimes, by the way, putting down payments can get you additional benefits, because some states have a specific programs where if you put 5% down, you can get a $5,000 credit from an institution because you're doing a VA loan. So there are other advantages to it besides just a lower monthly payment or a lower funding fee.
Mm-hmm.
You also get some, free money. It's free money, really, but nothing in life is free. So
We've said that
costing
before,
you 5% down payment. Yeah.
So, and just for the record, and I just want to reiterate this because Gitesh brought up a really good point. Renee, shout out. She said, we had no idea about the certificate of eligibility. The lending agent helping us wasn't familiar and just kept telling us we needed a DD-214. It turns out it was just the certificate of eligibility. Here's the thing, people. When no different than if you're looking for an agent, if you are looking for a lender, you want to make sure that you're vetting these lenders to know, you want them to know about your life already. You want them to know about your military benefits. If they don't, you might want to reconsider your options. And I say that with absolute 100% certainty, because if they don't know, they could be missing something. If they don't know, you could be paying out of pocket for something. If they don't know what Gitesh knows, because if you go to Gitesh is on it for legit, and other, you know what I mean? You need to go to somebody who knows and understands the VA home loan so that they can advocate for you properly and know the requirements so that you're not missing anything and not coming out of pocket when you don't have to.
Yeah. So go ahead.
Go ahead. No, you go ahead.
No, I was going to ask more questions to you. So if you got something to say, spit it out.
Yeah. So just something back to Renee real quick. So a DD-214 may still be required. Right. So first of all, you don't have a DD-214 if you're still active duty. So you can't always just get a DD-214. Sometimes a DD-214 or a statement of service is required to request the certificate of eligibility from the VA. But I'm not quite sure a good reason why your real estate agent will need that. Right.
Exactly. And you
shouldn't share that either, because it has your social security number on it.
Yeah.
So you really shouldn't be sharing that.
Boom. And I think that Cassandra put it pretty much, this is like the gold standard to go by. If a lender or realtor doesn't know what the acronym PCS stands for, red flag, people, red flag.
Yes. So let's talk about lenders and about UCAttach. So at what point during the home buying process does a family need to be talking to a lender? And a lot of times we hear these terms about pre-approval. What exactly does pre-approval mean in terms of both the VA loan and a conventional loan if somebody did want to go that route?
So, I think you should talk to a lender. I truly believe it, that you should talk to a lender when you're thinking about buying a house.
Mm-hmm.
Right? Because
like from the beginning, before you start. Yeah.
You should talk to a lender. You should talk to a lender the moment you start thinking about buying a house, because you don't want to do it alone. It'll be so much easier for you if someone is just guiding you in the process, right? Imagine if you didn't have to worry about, I need my certificate of eligibility. When should I request it? What documents do I need if I need it? So you are doing all of this before you fall in love with a house.
Mm-hmm.
So talking to a lender doesn't cost you a dime. Just to talk about you, right? What are your goals? What are you looking to accomplish? Right. So in my conversation with my clients, I like sometimes clients will call me and they will just be like, "Oh, I want to buy a house for $700,000 and put 5% down, and I'm buying in Virginia. And what can you do for me?" And I just tell them to take a long step back and just tell me about them. Right. Mm-hmm. You can enter all this data on any computer screen that you have. Right. Go to a website, pull up some calculators, and know exactly what you'll get back in return. But there is no personal touch. So, so we go through the whole spiel about just kind of high level about finances. And then, two most important questions I ask my clients, and something you guys should all consider thinking about before you buy a home, is how much cash are you comfortable spending to buy a home? So if you have X amount of money in your bank account, I'm not going to make assumptions that you want to spend all of it, or any of it for that matter. So you need to think about how much you're comfortable spending without feeling like you don't have enough of a nest egg saved in case of an emergency. If you're simply entering the data in the system, like any normal individual who is not equipped to ask you to take a long step back, is going to assume you want to spend that money. You have it, spend it and qualify.
Mm-hmm.
Just because you have it doesn't mean you want to spend it, right? The other question you need to think about is how much you're comfortable spending per month on your housing payment. Again, no assumptions here. I'm not going to assume that you want to spend no more than your housing allowance. I'm not going to assume that you want to spend as much as you can qualify for, right? You could be, hopefully you are living well within your means and you qualify for this mech mansion, but buying that home will mean that you have to compromise all the other things that you like to do, like travel, like eating out, like drinking, or whatever, or buying nice things, and that's your lifestyle. So it's important for you to consider those two questions. So my advice is to talk to your lender about these things as soon as you can before you do anything else. So you can kind of start wrapping your head around, is this really for me or not? What do I really need today to buy a home? Mm-hmm. So the more you know upfront, the better off you are. Your questions about pre-approval or pre-qualification, pre-approval process is a lender checking verifying the things that you have shared with them over the phone, right? I make $50,000 a year. I have $10,000 in my bank account. I have no debt. That's great. Now let's verify. Mm-hmm. So this is where you apply for a loan. A lender checks your credit. Make sure you meet the minimum requirements for a VA loan or a conventional loan if you so choose to do so. So you can write a competitive offer. Just a quick disclaimer, a pre-approval process does not require you going through any paperwork. A lender is simply required to check your credit, take the information based on how you provided it, and run the decision and roll with it.
But that doesn't mean that it's going to come out smelling roses on the back end.
Yeah.
Why is that?
All right, it's a great question. So it's not a requirement, but I certainly encourage all my clients to go through it for two reasons. One, you don't want me chasing you down for documentation once you're under contract. Because of all the inspections we mentioned earlier, you want to focus on that. You want to focus on making sure that the house meets your requirements. Make sure you pick out the paint color. Make sure you pack, right? Find the right movers. Whatever it is that you have to do, you can focus on all of that and not be chasing your leave and earning statements or your W-2s or the statement of service or your bank statements, any of that.
Mm-hmm.
Not to mention, you want to have all of your red flags that can potentially come out during the underwriting process to be reviewed ahead of time. So go through the complete review of your paperwork, your documentation with your lender ahead of time. I know it seems invasive. You don't have a house to find. You're not under contract, but someone's looking at all my paperwork. It's just so that the paper that you're getting in return can carry its weight. So go through the pre-approval process in detail.
So to go along with you talking about lenders, we hear there's a lot of national lenders and then there's local lenders. What is the difference between a national lender, a local lender, and how do you find which choice is good for you, and what should people know about picking a lender to go with?
Do you own a home?
I do not. No.
Right.
Loaded question.
What's the most expensive thing you ever bought?
Probably my car.
Right. Let's assume that car was $40,000.
Mm-hmm.
Okay. You're about to go spend 10 times as much. Who would you want to work with? Would you want to work with just any salesman that walks up to you when you walk into a dealership?
No.
Or would you want to work with someone that someone has recommended, someone had a good experience with, someone who can kind of guide you in the process, answer all of your questions? Sometimes that's the difference. Not always. Sometimes that's the difference between a local lender and a national lender. Right? We won't mention any names. And the reason why there's a difference now, I worked for a national lender before I came here, and Fairway Independent Mortgage is a national lender. I am just locally present here.
Mm-hmm.
So, when you buy a home in Texas, I'm here in Maryland, I'm no longer a local lender, but we have a local presence there, just like every other lender out there. I think the better answer to that question is you should work with someone that you feel most comfortable with at the end of the day, who has your best interest at heart, who is not treating you like a transaction, and who can accommodate your requirements as it comes to winning a bid on a house.
Mm-hmm.
A local lender will be able to offer you something that you need more than anything else these days. That is speed.
Mm-hmm.
Right. Prior to us starting the session, MJ mentioned that she was looking at some houses, and by the time she will see a home and her husband will come home, the house was already under contract. Right. They haven't even looked at the house. She just saw it online, presented it to her husband. It's already gone. Things are moving quick. So you have to offer speed. And often national lenders are not able to provide you that because of their limitations in processing, just the way systematically how it is set up on their end. So speed is a big issue. I know as a buyer, when you're buying something for close to $500,000, interest rate is an important factor. And I'm going to address that right now. You can always find someone cheaper, right? If you look hard enough, no matter what you're buying, you can buy a cheaper car, you can buy a cheaper house, you can get a cheaper interest rate, you can get a cheaper agent. But sometimes when you're looking for cheap, you end up getting just that.
What you paid for.
Cheap.
Yeah.
Sometimes that will mean cheap service. That will mean whatever. So the interest rates don't vary too much from a lender to lender. Again, I understand you can find someone cheaper. I'm not naive enough to think that I am the cheapest out there, but sometimes I am, sometimes I'm not. But I can tell you that the level of consistency that you will receive in service level from me or my team or for anybody who works at Fairway will be the same, right? Because you're not a transaction to us. You're not just going to call us in. You're working on recommendations. We're putting a name on the line. We're putting the name on the line of the person that referred you, right? If PCS Grades was to send me a client, I'm not only representing myself and Fairway, I'm also representing PCS Grades. So there's a huge difference in the level of commitment. Sometimes working with national lenders, you don't get the service that you need, right? Because you want to buy a home when you're not working, right? So again, the previous example, MJ finds a home while she's working. She can find the home. Husband comes home, and after work, the house is gone. But if you find a home after hours, you want to be able to talk to somebody after hours. And often with these national lenders or call centers that you call, you're working with just the individual who's answering the phone call at that point. You don't get the consistency. You don't talk to the same person. Mm-hmm. And the real estate agents on the other end feel that. And that is the mindset in the market, that they are just feeling that if you work with a non-local lender, you may not get the same level of service or response that you would if you're working with someone local. That you can pick up the phone and call on a Sunday afternoon, right? Yeah. Or a Saturday afternoon. It's the same person you call, Monday to Friday, Saturday and Sunday. That's it.
No, and that makes sense. And again, just to put into perspective what Gitesh is saying, y'all, from the vast majority, if not all of us, this is most literally the biggest purchase of our lives. So if we are entrusting the biggest purchase of our lives to somebody, we might want to know what they're about and that they know their ish. Like our friend Gitesh here. I'm just saying, you can't afford, literally cannot afford not to go with somebody who knows what they're doing and will give you their absolute best.
Well, just to say one more thing, right? So and again, nothing against any national lenders, they provide a phenomenal service. And if it works for you and you're happy with their service, you're committed to them, roll with it. But understand that it may come at a cost, right? I mentioned earlier, there's no free lunch. I said there's nothing free in life, but no free lunch. You may end up losing some homes just because you cannot offer a fast turn time. So some of these national lenders require 45 to 60 days for closing. I had a VA client write an offer this morning with a closing of within 17 days. Well, I'll feel the pinch on it, right? Because we have to move quick. 17 days. He or she can't afford to lose at home, so they're going in very aggressive. So your cost for you of working with a non-local lender may be a slightly higher interest rate. Sorry, a slightly better interest rate is your benefit, but your cost might be losing that house. So if you've been looking since December of last year till now, in most markets in this country, property values have gone up between 4 to 5% just in the last 6 months. Mm-hmm. So take again the same $400,000 example, 4% increase. That's $16,000 more is costing you to buy the house. You plan to live there for 4 more years. Even with a 0.25% higher interest rate, you are not paying $16,000 in interest over the next 4 years. But it's costing you a lot more than the potential interest rate, potentially costing you more. So there's always cost involved in making a decision. Just, kind of compare that to the benefits.
Right. And so that actually leads to this next question, which is a scenario question posed by our editor here at PCS Grades, Lizanne, shout out. So right now, it is an extreme seller's market. And so most homes are going to have multiple offers and many buyers have to bid above that listing price. Now, when military families utilize their VA home loan, the home appraisal is that mandatory part of the home approval. So that cannot be waived. So if you want to make an offer above the asking price, but then the home appraisal comes back to the original price, then the VA home loan will only cover up to that amount. And the buyer will have to come up with the rest of that cash out of pocket in order to remain competitive. So this problem obviously can be solved with like an appraisal rider clause that makes the offer contingent on the home appraisal. However, many buyers are waiving that clause in order to be more competitive, and the seller has no reason to decrease the price because of that issue. So anyone using that VA home loan and bidding over that listing value must either have access to extra funds in their pockets to make up that difference, or risk having the contract canceled after the appraisal when the numbers don't match up. So what can military families do in this situations? And let me tell you, there are a lot of our VA home loan peeps who are encountering this exact scenario.
It's funny, I had this conversation with a client on Monday. Yesterday was Tuesday. Yeah, so on Monday. Look, there is no solution to the market. There's just a high demand. You're competing on any given home with 10 other buyers. And some of those buyers are coming in and writing a cash offer. Some of them are writing a non-contingent offer letter. The reality is that you can most certainly waive your appraisal contingency, appraisal rider, like you mentioned, which means you are not protected by that clause. And if the appraisal comes in lower, you're just paying out of pocket. Working with the right real estate agent comes in handy. Keep in mind, this is one thing in the home buying experience that no one controls. Not your lender, not your home inspector, not your real estate agent, nobody. Mm-hmm. But it is the most crucial piece of the equation. Your real estate agent will run you comps and kind of share with you what are some of the homes selling for in the area. But that's one person's opinion. And then the appraisal is another person's opinion. So two things can happen, right? So when you write an offer, VA appraiser will go appraise the property. They will look at the recent sales in the area and look at all those comparables to come up with a value that they believe is good for the home that you're buying, including taking into consideration the competitive nature of the market, right? So there's an accountability for time. There's accountability for the market adjustment. So everything is considered in there. They will also rely on the real estate agents to share the comps. So if the listing agent thought that the house is worth $900,000 or $400,000 or $200,000, whatever it is worth, and the buyer's agent also thought that, they will share their comps with the appraiser. If the appraiser cannot come up with with that value, the sales price, they issue something called a tide water warning, which allows us 24 hours to provide additional comparables that will support the sales price that the buyer, the seller, the listing agent, the buyer's agent came on an agreement with. So, at that point we can provide additional comps, and then we get the value. If that's not, if then the value is still not supported or the sales price is not supported, you can then appeal the appraisal value with the Department of Veterans Affairs, provide them additional comps, and justify why a higher value should be there than what the appraiser came up with. 50-50 chance that they may adjust the value, or they will say, no, the value that we have in place is good. Again, this is where having a local lender comes into play better than a national lender. Just speaking from experience, I didn't even know such a process existed if the value came in lower, besides the tide water warning, that you could appeal that with the VA.
Takeaway. That's the takeaway, people. 50-50, but keep it in mind.
And that could be on me that I didn't know, but sometimes the bureaucracy that comes with a national lender, it's just that, right? If you don't know, you're not talking to the right person, you don't get the right answer. And I can speak from my experience here. It's been very different, right? Ever since I joined Fairway, I've been able to help more military families, been able to offer speed and kind of help overcome some of these obstacles. Anyways, back to this. So you can appeal the appraisal and don't have to accept it. You can always just pay the difference out of pocket. You can always buy the house for more than it's worth because you plan to put your sweat equity in the house and fix the house up and plan to be there for the next 17 years and don't care what the house is worth today. This is the house you want. You can always pay more. On the other end, you and I are all playing in the same market. So as a civilian, I'm writing an offer on the same house that you're writing an offer on, and I may not want to waive my contingencies, and I may lose the offer even if I waive the contingencies, just like you would. So certain things you can do is you can appeal to the seller by writing a letter as to why you think you should have the home. Though I was just informed this morning that it is being frowned upon now, that you cannot really write a letter to the seller as to why you, why you need to.
That's being frowned upon from the buyer's standpoint, and the only reason
by the real estate
industry,
different real estate association industry itself. Yeah, I'm guessing it has to do with somebody sued somebody who wrote a letter, their offer wasn't accepted. I don't know, but I don't know if it's the case in your market or not. But it is being frowned upon. I was just informed of that this morning, so I don't know the details. Just check with your real estate agent. And if you can, right, maybe the emotional appeal will come into play. It helps to pay your own closing cost, right? So the less you can ask the seller, the better off you are. So if you have the appraisal contingency, but no financing contingency, which is kind of tied in automatically to the appraisal contingency, that can help you. You can pay your own closing cost. Often the sellers don't want to work with military clients or VA clients because they believe that they have to pay more closing cost when they work with a VA buyer, or they had to pay for more repairs, or they have additional closing costs, additional inspection costs. Some of that is just their lack of understanding. So working with the right realtor and right lender, you can overcome that. Then the last thing you can do is just take more shots. Right. So if you're playing any sport, if you're playing soccer, right, I'm a soccer guy. So if you're playing soccer and you took 5 shots and you scored 0 goals, maybe next time you take 10 shots. Yeah. So you may have to take more shots, write more offers to win an offer. If that's the only drawback you have, then so be it, right? Because you're not the only one. Even those that are not using VA loans are losing offers. And I have some ridiculous stories about people that are escalating, waiving all the contingencies and still losing, right? So you just have to create more chances, go out and look at more homes, and write more offers.
Go ahead, Megan.
No, I was just going to go on with my next question.
Go ahead with that next question. And just for the record, everyone, I'm seeing all this engagement and I'm loving it. Shout out Lori Henzik, sister. She just went through this not that long ago. I was following your journey. But yes, Megan, go ahead and ask that because I'm going to start collecting those names for the Wheel of Names for our 2 giveaways today. But yes, go. Keep it going. Yeah.
So we've talked a lot about, what people need to know in regards to the VA loan and lenders and everything today. So what should a military family do for the lender to help make the process go smoothly and be easier? What should they come, when they're shopping around or start talking to a lender, what should they bring with them to that first meeting to say, hey, this is what we want to do?
I mean, I think having your basic information on hand is important. So your leave and earning statements, your active duty, your pay stubs if you are not, or leave and earning statements if you are in a government employee, your W-2s for the last 2 years. So 2 most recent leave and earning statements, your W-2s for the last 2 years, most recent tax returns, probably most recent 2 years worth of federal tax returns, 18 and 19 right now, 19 and 20 if you filed 20. Your DD-214 if you're discharged, or your statement of service if you're active duty. Mm-hmm. Your point statement if you are in the reserves, your retirement point statement. If you have a disability rating, maybe have your disability award letter handy. And honestly, to the first meeting, Megan, you should just come prepared to let the lender ask the questions or the agent ask the questions, and then you can go prepare. But if you want to be an A+ student, you can have some of your basic necessities, like your bank statements, have access to your accounts online. I don't know who doesn't do online banking these days, but if you don't, save your statements. It's always good if you're not moving money back and forth between your accounts. Lenders appreciate that. So we don't have to source all that money. Please don't keep any just cash under your mattress and then decide to put it in the bank account right before you buy the house.
So wait till
That's-
after we buy the house to dig up grandma's can in the backyard.
Yes, I don't think you should keep any cash in a can, but if you are keeping it there, then certainly wait till after you buy the home to put it in your bank account. But yeah, just get a hold of your real estate agent and a lender quickly as possible, and encourage So just one more thing. Please encourage your lender and your real estate agent to work as a team collectively for you. Their common goal is to help you become a homeowner, and that's what matters the most. So you want to work with a team, not two individuals, when possible.
So what advice would you give somebody? Say I have a realtor or a lender and they're just really not gelling with the other person. Maybe it's a personality conflict. Maybe they had a bad experience with each other in the past. How should me as a person buying a home navigate that if my lender and realtor aren't gelling together?
I mean, if you love both of them, then you just tell them to get it together and move on, right? If you love them both. I mean, really, like if you are finding that they both have your best interest at heart as two individuals, 99% of the time, the realtor and the lender will just mesh. If they don't, then you just get rid of one that you don't want to work with, right? Assuming you have no agreement in place. If you don't feel loved, if you don't feel like a human being working with them, but you feel like a transaction, maybe you should look elsewhere.
Okay.
But tell them to get it together.
That's good advice. I like that. Everybody take note. Whenever people aren't gelling together, you're just going to tell them to get it together and move on.
Hashtag get it together. And just for the record, my husband, actually, who's watching, shout out, Boo, not just supporting his wife. He's actually here for a purpose. He's actually to hear what's being said. And he just text messaged me and said, you should have made this a 2-hour webinar.
Yeah. Hey, can I just say one thing real quick? If you're looking to buy a home, you have to be committed to it full time. You cannot be a part-time home buyer. Things are coming in quick and they are leaving quick. MJ, I'm not calling you out. But
yes, you are. Shut up.
Hey, we enjoy calling people out. MJ, listen up here.
Especially because your husband's over here too. So.
Yeah. So I've got one final question from me that might throw you for a loop, Gitash. So we talked about using the VA home loan to buy a home. And when we think of a home, we think of a stationary building that is not moving. What if I want my permanent home of residence to be a houseboat or a giant RV? Can I use the VA loan for that if it's going to be my primary residence?
Great question. You cannot buy an RV using your VA home loans.
Okay.
VA benefits. I think so. RV is considered a recreational vehicle, so you have to go. Well, it's not because that's what RV stands for, but you have to go get a loan for those purposes. Okay. So that'll be specific to that. You can buy a manufactured home as long as it is on a permanent foundation. If you can drive it away, you're not getting a home loan on it.
Okay. What about the houseboat? Same thing, because I can drive from one port to another port. Okay.
Correct. Can do that. You get a boat loan.
Okay.
Or a plane, because you can just move it. It has to have a permanent foundation.
Okay. Makes sense. Word. I mean, if we don't like our neighbors, we can just go find a new port to dock in and a new campsite to call home, and it makes sense though.
Can I add one more thing on a property type that sometimes comes up? It's sometimes civilians or military clients, they want to buy a home on a large piece of land. It's 40 acres. And it's mostly land, right? You want that land, but it has a home there. VA doesn't have any limitations on the size of the land that the property sits on, as long as the primary purpose of that property as a whole is residential.
Okay. And then one last question. We saw it in the comments a little bit ago. VA home loan used for renovations. Is that possible, or is there a specific VA loan that can be used for home renovations?
So it is possible. VA did introduce that a couple of years ago. with limitations, right? So you can, not every lender is participating. Some lenders that are participating, they have their own limitations. They have their own understanding of the VA guidelines around it. But basically, it limits you to non-structural repairs. So you can't, put an addition to the house, but you can repair the house on the inside. It's currently on hold, on pause because of COVID. Since last year, it has been on pause. So no opportunity there at the moment.
Okay. Good to know. MJ needs a minute. You're muted. We don't know what you're saying.
Every time with the mute. Every single time with the mute. Okay. Woo! All right. I'm back. It's okay. I'm going to share my screen. I'm going to share my screen and I'm going to show you guys what you're winning and who's going to win it. All right. Are we ready?
Yes.
Ready.
Okay. I have been kind with my screen tabs, so you won't see inside my brain today. Too much, anyway. All right. Here we go. So the first thing we're going to be giving away is a little look at the Irish, a little leprechaun juice. And you can use this about year round because we all know what leprechaun juice is, and it's not OJ. So, yeah, I went there. So for the leprechaun juice, receptacle, whatever, is going to be, oh my goodness, Sarah Rod. Girl, see, every time you're on fire. Congrats. All right. All right. And the next one up that we're going to be giving away is it's not Army. So if your spouse isn't serving in the Army, that's okay. If you don't, it's going to be a Hope Design Limited wire bracelet with your chosen military branch on it. So you'll need to get with me on what that is. So the winner of the wire bracelet courtesy Hope Design is going to be, drum roll, Monica Barfield. Shout out. Congrats.
Congratulations, Monica and Sarah.
Yes. And so if both of you could get with me afterwards, whether that's emailing me or going to the PCS Grades Facebook page. I'm going to stop sharing because I don't want to do that to you. Yes. Okay. This was a really exciting, or very, very exciting. And yes, it did go long, but it was because that particular information is stuff that you guys want to know. I know there are still questions left in the comment section. We're staying in touch with Gitesh to help answer those questions. And we also dropped his contact information into the comment section below as well. If you wanted to just kind of get with him, just remember he can't tell you the specific interest rates in the state if he's not licensed in that state, but he can help you navigate a little bit more of that process. Gitesh, thank you so much for coming on.
Thank you.
You're awesome, and you can keep up with our shenanigans, and I love that. So that is key. And Megan, as always, thank you so much for dropping all that policy and, being a BA, as it were. And so until next time, everyone, Megan?
This too shall PCS.
Thanks, everybody. Bye.